Hey VV Nation, all of YouTube, what's going on? My name is Patrick France, Senior Instructor here at VectorVest, back with you guys starting off your week this Monday week, talking about the banks. As we know, Bank of America did release their third quarter earnings report. Stock has risen sharply after that earnings report, but let's take a look and see if that is a good idea to start jumping on board and adding bank stocks to your portfolio. So, as always, before we jump into the video, make sure to smash that like button, subscribe if you're not already subscribed, and let's get right into it here today. All right, let's get into it here today. So first off, let's take a look at the summary of the Bank of America earnings that were released earlier this morning. So first and foremost, Bank of America reported better than expected third quarter earnings as expanding profit margins from consumer lending helped offset sliding investment bank revenue. So the increase in interest rates, which is hurting the individual consumers, seems to be helping the bank and helping them stay afloat currently. So if we get down into the meat and potatoes, as you will, spending across the second largest U.S. debit and credit card jumped 9% or $18 billion compared to the same period a year ago. A $68 billion increase in consumer deposits helped offset falling balances from corporate customers, which dropped 7%. So the average U.S. consumer is putting more money in the bank, and the corporate consumer is having a dwindling cash pile right now in their bank accounts, pretty much is what this is stating. So once again, Bank of America, like other Wall Street banks, benefited from the Federal Reserve campaign to cool down the economy with rising interest rates. And let's see how much that's actually helped. So net interest revenue, or the difference between how much a bank earns on its loan book and pays for deposits, surged 24% to $13.8 billion, fueled by higher interest rates and a 12% increase in loans. So they're definitely seeing a little bit of a boost from the increase in interest rates currently going on. So if we scroll down a little bit more, as they stated, they did lose out on their investment banking, which fell roughly 46% over the last year because they've been putting deals on the back burner because companies are hesitant with the current economic environment and holding off from making those deals. So they are seeing a drastic slowdown in their investment banking, which could be an issue, not necessarily for Bank of America, but some of the other larger banks that rely on these deals going on, or the investment opportunities or the investment bank revenue to help keep them afloat. So this is something that's going to be interesting to watch as these earnings continue to come out. But overall, Bank of America reported a quarterly profit of $7.1 billion or 81 cents a share, down from the $7.7 billion a year earlier. But overall, they were expecting a 78 cents per share estimate, so therefore they did beat, which gave them a nice pop here so far this morning. Now, with that, let's go ahead, jump into the VectorVest 7 software and see if really right now is a good time to add these to your portfolio. So I'll just simply jump out of here, and there we go. So the three stocks we want to take a look at today: Bank of America, because they just reported the earnings, but then two other opportunities instead of playing individual banks, looking at banks as a whole with two ETFs, one bullish, one bearish, with FAZ being the bearish financial ETF and FAS being the financial bull ETF. Now, if you're not familiar with any of these, as always, when in doubt, right click. When you right click inside the VectorVest 7 software, the second option you'll see is the View Full Stock Analysis Report. And if we pull that up, at the very top, it'll tell you exactly what the ETF is looking at. So for FAS, for example, it's a 3 times leverage ETF based off the banks or the Russell 1000 Financial Services Index. So if you're not comfortable with leverage ETFs, there are other options available to you. But today, for this video, we're going to be taking a look at the 3 times leverage ETFs with FAZ and FAS. Now, one of the things that stands out before we even get into the charts and look at that is looking at the analysis of these stocks. First and foremost, taking a look at Bank of America, we start off with the basics such as the company's name, the exchange, price, dollar change, value, but then we get to the RV, RS, RT, and VST. Now these are all going to be cast on a scale of 0 to 2, And all you have to remember out there is above one is good and below one is bad. So for the long-term potential or the relative value of the stock, Bank of America has good long-term potential. RS shows how much risk is involved with the stock. With it being above one, less risk associated with the stock. Timing at 1.12 tells us the stock is in a short-term uptrend. But when we analyze FAZ and compare it to FAS, yes, FAS is up almost 7% at the time of recording, but looking at the RT, the relative timing, which shows the short-term price trend of the ETF, at 0.68, that tells us even with this big up day here today, on a short-term basis, financial bulls are still in a downtrend. So before we even get into the chart, be careful knowing this fact alone. So with that, let's go ahead, jump into the chart though, and see if that can give us some insight on what to expect going forward. So we'll go ahead and click on the Graph All button at the top. And starting off with Bank of America. So first and foremost, let's go over the chart. Make sure you're comfortable with what you're seeing out there, or you understand what you're seeing out there. So we have the price shown in candlesticks. And then below there, I have some of my favorite indicators, MACD or the moving average convergence divergence, and then a stochastic oscillator at the bottom. Now MACD is more of a trend indicator that shows both short and long-term trends. Stochastic oscillator shows overbought, oversold territory on a stock based off that price action. So looking at it here, we can see Bank of America has been in a steady decline most of 2022, but we do see a nice pop here off of the most recent lows, but has it started a new uptrend? Well, let's go ahead, use the freehand line from the upper left and connect these highs. And as we can see, as of right now, we are pretty much right at that long-term decline or long-term downtrend that we've noticed for pretty much all of 2022, and we're stalling out at that level. Now, trend lines can act as support resistance. Right now, since it's been below that point, it is acting as a level of resistance. If we click on the 3M button to zoom into a 3-month time frame, we can see we blasted off early this morning, but have since been pulling back and coming back down and sitting right at that level of resistance or that downtrend line. So as we say here at VectorVest, one day doesn't make a trend. So if you're interested in jumping into the banks because of the positive earnings that we've been seeing so far, be careful. Wait for follow through. Just because we are at that level right now doesn't mean we're going to hold that. So if we can see another day confirming that, pulling us away from that downtrend line, then that would be a positive sign and showing a new uptrend is starting to form. Now, if we zoom back out for a brief moment real quick, I do want to point out here that Bank of America has been in a long-term bullish divergence. What I mean by that is, as price has been moving lower, looking at the MACD here at the bottom, I'll use another freehand line to demonstrate it though. The MACD has been slowly increasing over time. Now, whenever you see a divergence, you always want to wait for some type of confirmation that the divergence is taking hold. Well, a breakout of the downtrend line could be that type of confirmation that you're looking for. So even though we're right at that downtrend line as of today, that doesn't give us that true confirmation. We need to see follow through or another up day really pulling away from that downtrend line to get confirmation that that bullish divergence is really starting to take effect and a new uptrend is forming. So before you let your emotions take advantage of your portfolio, step back, take a non-emotional look at the stock and take a look at the chart and wait for confirmation. Because with all the economic uncertainty, we'd rather have a little bit of profit given up for their safety factor to increase or the probability to increase of a successful trade. Basically balancing that risk to reward profile that you would typically look at as an individual investor. So now that we've got that, let's go ahead and take a look at FAS and FAZ. So we'll go to the next one, FAZ. As we can see, it had a sharp decline just last week based off the bank's earnings coming in at the end of last week. But as we can see here, looking at stochastics, we are seeing that it's getting close to that oversold territory. And I'll zoom into a 3-month, make it easier for everybody out there. But we are seeing that we're getting close to that oversold territory already. And looking at the price action, yes, we pulled back the last few days. Today, after the news with Bank of America, we saw FAZ continuing to slide at the beginning of the morning, but look at what it's done since that point. We've seen people buying the lows of FAZ here today, pushing the price higher. So telling us that there's a lot of buying going on off of these lows, indicating that smart money or big money may be taking the opposite side of the trade that you potentially are looking at right now. So keep an eye on this as you move forward. Then looking at FAS. FAS, we can see that we've been on a steady decline, no surprise there. But when we put on that trend line like we talked about earlier, connecting the highs here, and when you're using a trend line, it's best to make sure that you use the wicks included with that, not just the bodies, because the wicks indicate the highs and lows, which are definitely part of the trading activity as well, or information that you need to be aware of. So looking at it here, we still have a long way to go on FAS before we retest that trend and start to say that there's potential for a new uptrend to form. So hopefully you guys have enjoyed today's analysis. And just to quickly summarize it here, what we see is it may be a little bit too early to start jumping on into the bank trades. So don't let your emotions take advantage of your portfolio. Plan your trade and trade your plan. And right now, there's not a whole lot telling you that you should go ahead and start jumping in quite yet. There could be in the near future, so make sure to keep them on your radar. But be cautious out there and keep in mind the overall macro environment. So let me know your thoughts down in the comments below as well. I'd love to hear your feedback on this. Are you guys jumping into the bank stocks? Are you guys still waiting, being cautious? Or are you taking the other side of the trade and looking at FAZ? I'm curious to know what your guys' thoughts are as well. So until next time, take care, adios, and toodles.